Hey there, my name is Fela Abioye, and this is How to Corporate, my digital show about how successful professionals navigate career moves and money matters. Today's topic, how to invest in real estate with my guest, Junious Williams IV. Thinking about, taxes, right? Taxes is a big part of just, real estate investing. Are there any benefits individually for, let's say, investing with a firm like yours, right, with the group, setting in that way?
One of the good things about specifically multifamily is that you're able to depreciate the asset in year one. This is a Trump era tax cut law that all real estate investors appreciate past president for. So traditionally assets, real estate are depreciated over, I think houses are depreciated over 27 and a half years. And then what changed was every little thing inside of an apartment, let's say, like the appliances, the furniture, the roof, foundation, siding, what have you, have different depreciation life cycles. And what the current tax system allows you to do is depreciate all of those things in year one. So pretty much dollar for dollar, what you invest, you get that as a passive loss on your income taxes. Now, if you don't do real estate full time, you can take those passive losses only against other passive income. So down the road, as you say you invested $40,000, down the road, we sell the property, you make $50,000, you're able to write off $40,000 of that gain. If you're a full-time real estate investor, you get to write off that $40,000 of your income, all income, regardless of passive versus active.
So of that example, only 10,000 is considered, let's just say taxable income or gross or whatever. Right.
Yep.
So no, man. Hey.
Yeah. So, the tax code, obviously the previous president was a real estate developer. So it's really beneficial to full-time real estate professionals that own their own company. For a passive investor, it's still beneficial, especially if, say, you sold Facebook stock and you made $40,000, you made a $40,000 gain. Mm-hmm. And you would have to pay long-term capital gains on that. Mm-hmm. You could take that money and invest in an apartment syndication, and you could get a $40,000 capital gains loss or a passive loss, and you can use that to negate. It's kind of like a 1031 exchange. Yep. You're familiar with that. But that's another way that real estate is beneficial from a tax planning point of view. Now that I've said all that, I must use a disclaimer that I'm not a CPA and I don't give tax advice, but there are tax strategies for investing in real estate for sure.
Sure. Yep. No, like I said, it's a lot of gems right there. I don't want to get too deep, but look up what a 1031 exchange is, look up depreciation on real estate, but there's a lot of advantages, in order to be able to protect your asset and keep that income going without having to dole out so much bread, along the way. So, man, that's awesome. So, and I kind of asked this earlier, right? But, but I'm gonna ask it again. So, oftentimes people think that you need a lot of money, right, to invest in real estate. Like, what are your thoughts there, man? Is that true?
I think I am the bearer of bad news because the answer is, if you're going to really investing different people will say different, define that differently.
Yeah, no, man, keep it honest, man.
If you're really investing, you're using your money to invest. There are tons of folks. Like I said, my first deal came from a wholesaler. He found the deal. He flipped it to me. He made $4,000. I don't know how much money he spent on marketing. I don't know how much time he spent. I wouldn't consider that investing in real estate. I would say he was a deal finder. He was kind of like a broker, but not a broker. But I wouldn't consider that investing in real estate. Investing in real estate is, okay, I'm going to put my money into this asset or into this opportunity. It's going to make 7 or 8% per year, maybe more. And then it's going to sell. And then hopefully, over the life of the investment, I doubled my money. To me, that's real estate investing. To say you need a lot of money, I mean, that's relative. The deal that we did, the Grand Park Square, our investors, we asked for $10,000. $10,000 10 years ago for me, it's a lot of money. $10,000 now, I'm doing okay. So it's not as much of a sacrifice, but it's all relative. I think we tried to make it to where we could get more people that were maybe on the edge, like, I don't know, I don't want to give nobody else my money because what if they run off with it, or what if they don't pick up the phone when I call and I keep calling, and I know where they stay, I can just pull up on them or something like that.
Say, hey man, I haven't seen that distribution check in a while, man. Can I?
It's like, hey man, so what's happening with the project? So we tried to appeal to a lot of people, for our project. Obviously, I mean, we're building houses. Like, you could drive by and you could see if nothing was happening, and you'd be like, hey man, so what's happening? Like, exactly. You're building houses.
It's been about 3 years. I ain't seen that one house built.
You're not doing what you need to be doing. Like, what's happening? For us, we have a little bit of a process, that I learned from doing the apartment. I mean, especially as the pandemic hit, I mean, we sent an email out every single week about what was going on, because, I mean, we were freaking out. I assumed that all of our investors were freaking out. I mean, we did an investor call probably in May of last year, 2 months into the pandemic. And we were like, look, this is the real thing. This is not going anywhere. This is the update. We're trying to sign leases. And this was before the eviction moratorium. So we thought, okay, we're going to lease up. People are going to wear a mask, or this thing's going to go away, and we're going to be back to business. That was not the case, right? So we opened communication immediately, and for Grand Park Square, I learned from that, and I communicate early and often. I'm a big fan of The Godfather, and like they said in The Godfather wants to know about bad news immediately, and I deliver as soon as I find out something bad. I make sure I tell as many people as possible. It's like, hey, this is the issue. These are our ideas. This is what we're trying to do. We try to be reachable and transparent. Yeah. So like I said, we learned from the apartment, open lines of communication, try to communicate early and often. And, unlike investing in the stock market where you may not be able to you're not going to be able to reach the CEO. You're not going to be able to reach, board of directors or nobody like that. We're reachable, and we're real people doing real projects, right here in Houston. You can drive by, you can touch, feel, smell. Like I said, we do a monthly email distribution with pictures, and sometimes we do videos, depending on how much time I have. And we just try and communicate, and I think people appreciate that when you're dealing with other people's money. So you gotta.
I'll say, being on the other end of that, I appreciate it.
Yeah, and it's paid off a lot of. It's bought a lot of goodwill.
100%.
Because I mean, the apartment. I mean, it hasn't gone to plan. I mean, there's no, and I don't deny this with our current investors. But they always say, man, we appreciate that you send us an email every single month. And whether the news is good or bad, these are adults. It's not like they're children you're going to hide. Like, they're reading the news. I mean, they see what's going on. And I think it's important just to discuss it with them. You actually have a voice, in some of our projects, as opposed to you put your money in Sears and Sears go out of business. Like, hey, not getting none of your money back. Sorry.
Yeah. I mean, pros and cons, man. But no, I think that's a good kind of a thorough explanation, because, for folks who may have not thought about maybe, investing with the real estate firm like yours, now, you kind of get a sample of, what to look for, right? Somebody who's transparent, I should over communication, so really understanding the project, understanding what's going on. Because, I think there's passive income is something that's brought up a lot, right? And especially for those who, have a full-time job or have a 9-to-5 and want to be able to, invest, right, in other different ways. But passive doesn't mean ignorant, right? So, and I think that's always the big key to know the difference, right? Like you can have passive where you're not in the driver's seat of it, but you shouldn't be ignorant, right? You should be abreast of what's going on, how, why, understand the numbers, like don't just put your money somewhere and you can't really understand what the return's supposed to be, how to calculate it. Yeah, exactly. Man. Eyes wide shut, man. Eyes wide shut. So 100%. I think that's a big element there that people shouldn't miss. So.
Yeah, and just to add to that, I mean, I remember I was referred engineer actually that was trying to get started in real estate, and she and her husband had full-time jobs. They had 2 kids, and she's talked to me about trying to get started. I'm like, man, when do you have the time to spend to get up to speed on everything that's going on? Because 10 years ago, single-family rentals was a mom and pop business.
Mm-hmm.
That is not the case anymore.
Mm-hmm.
Not with Wall Street's interests and their behemoths and their just unlimited pools of capital and resources and management. Mm-hmm. I mean, to be a single family landlord, you are competing against the biggest companies in the world. That was not the case 10 or 20 years ago. So I'm like, so you want me to teach you how to do real estate, or you just want to invest $10,000 and you'll make a 20% return over 2 years? How about be a lot easier for you to do that?
Yeah, no, man, I think that's knowing yourself, knowing that, the knowledge. I mean, and we talked about it over the years, and I know I've looked at just different opportunities, and like at one point I was looking at short-term rentals and understanding that process. And when I really got a good understanding for it, I was like, that's not for me. So, I just knew 100%. I said, that's just not, I don't have time for that. I don't want to have time for that. I'm not interested in just operating the level of effort that goes into it. That doesn't mean it's not a great opportunity, a lot of great returns, but it's work. and I've already got work and the family and all the other stuff that I got to do. And I enjoy doing that. So I'm gonna focus my energy here and I'm gonna do something else. So
right. And you're in Grand Park Square, man, you're gonna get a 40% return. And mind you, our pro forma
I'm gonna hold you to that right now that you said it.
Oh, hey man.
Yeah, no.
I should probably stop there, but we're gonna blow through the projections.
Yeah,
like, it's.
I've seen.
So you can do the same.
Yeah.
I don't know what the returns are for Airbnbs and short-term rentals, but to get 40% return and you didn't have to do anything. That's entirely different than Airbnb. You hustling, you got to reply to people, you got to book, you got to send people to clean, you got to inspect. I mean, obviously there are people that we know that do it and they do it very successfully.
Sure.
Not for me, man.
Yeah, no, it's just, again, no knock to it. You just, you got to know yourself. And at the end of the day, and understand the difference between passive income and truly what is passive, right? So I think that's the emphasis that we really want to just try to point out here. But do your research, understand what you're getting yourself into, and I think that will help usually guide someone right when they decide to invest, right, and decide to go forward. So, and I guess and we kind of talked about this, but why do you think why are people so maybe more comfortable usually investing in real estate on their own than you think versus investing with other people, right? I mean, and we kind of joked about it a little bit around like, hey, I want to be able to, I don't trust this guy with my money and all the other kind of stuff. But maybe why do you think just over your years, why do you think folks feel so more comfortable doing it on themselves versus investing with other people?
I think it's, man, you work a job, man, and say you're in middle management, you're like, it's your money. You're going to be the boss and you want to have your own thing. You don't want to have no partners. You don't want to answer to anybody. I completely understand that as well. And, it pays the cost to be the boss sometimes. And to do a deal on your own, like when I was doing my deals on my own, I mean, I was barely scraping by with the lending requirements and the equity requirements. And, I didn't have to answer to anybody. I just had to answer to my wife, but, I wasn't like I had people that I had to answer to. It was my own thing. I made the decisions. I focused on what I was, the deals that I focused on, and I didn't have to answer to anybody. I do think had I invested in bigger projects, I would have been able to learn about the bigger projects. So when I tried to do my own bigger project, I would have had that insight of knowing how these deals go. I could have learned, how do other, lead developers, lead sponsors, how do they communicate? What do they look at in a deal? And I would have really learned a lot through that process. And now I'm actively looking at passively investing, even though I got my own stuff, passively investing in other people's stuff, because there's a guy that I know that has 200 unit apartment under contract near the medical center. It's like, man, that's a pretty good asset to invest in. And I could put $40,000 in that, and I could own a piece of, an asset. It's on Main. It's like right across from NRG. It's like, man, turns look good. Man, like I don't have to do anything. Like I don't have to do anything.
Yeah.
Man, that sounds pretty good to me. Even though I got my own deals that I'm trying to put, money into as well. But I think it's just, people don't want to deal with bureaucracy. People want to just do their own thing. And hey, man, there's nothing wrong with that. But just make sure you're well capitalized, because something is coming. Just like in every single business, something is coming, and you want to make sure that you survive. Because once you survive, you get on the other side of whatever it is. The market's appreciated 30% in the last year or so. So had I survived and I'd have kept my rentals and survived through the pandemic, man, the houses that I bought for $100,000 are probably worth $250,000.
Yes.
So had I survived, there is a pot of gold at the end of the rainbow. Once again, not trying to dissuade anybody from doing things on their own, because it could have worked out. But our apartment went up $2.2 million in value. And we bought it for 5.3. It was just appraised at 7.5. So that's what, 50% increase in value in 2 years.
How many years? 2 years?
2 years.
It's a decent return. It's a decent return.
25%.
That's all.
Year over year. So I didn't get it in those 3 houses where I could have got wiped out completely.
Yeah.
And who knows if there would have been a bankruptcy. This thing could have destroyed my life.
Yeah.
But like I said, being a part of a bigger deal. And really, now that I think about it, the investors we have, are folks more or less our age or a little older, married, they have kids, man, they just really don't have the time. They don't have the time, and they recognize that they don't have the time to get up to speed to do it on their own. Mm-hmm. And they're like, you know what? We know Junious. We like him. We know we can find him if things go poorly. And they feel comfortable, investing their money with me. So I'm incredibly grateful for that opportunity.
No, man. Like I said, it's awesome. Like I said, it's perspective, man. And that's just really what I want people to get out of this, because I think it's just, I've been fortunate, right, to know you and to be able to be involved in and all these processes along the way, and just have knowledge of, from your learnings. So, and not everybody always gets that. So, I'm hoping that folks that are listening, again, this is just a new avenue, right, to maybe, seek out, right? So if you want to get, you want to start investing in real estate, if you want to start on your own, hey, go about it, right? Do your research, do your thing. Or if you want to invest in a real estate development firm like Junius's, there's opportunities out there, right? So, and
I'll add just, to try to bring it all the way home. most of real estate deals prior to the Jobs Act, which was an Obama law, was you had to be basically in a country club. They called it country club money to invest in these type of projects. With the Jobs Act, Obama basically opened it up to where everyday people could invest in real estate syndications, or that was not the case before. You pretty much had to be an accredited investor. An accredited investor is someone that makes over $200,000 per year for the last 2 years as an individual, or $400,000 as a married couple, or you have to have a net worth over $1 million, not including your home. It's like, well, I mean, how many people are? If you're starting out and you're in your 30s, like, I mean, how many people, unless you played in the NBA or something, you played in the NFL, like. Yeah. Chances are you're not going to be considered an accredited investor, but you can be a sophisticated investor, which means that you have demonstrated education that qualifies you. It's funny, it qualifies you to invest your own money, which is belittling by the SEC in the first place. But then you also have to have a pre-existing relationship with, whoever you're investing your money with. And when we did Grand Park Square and the apartment, we did a SEC filing. That's a 506B filing. So we filed everything with the SEC. We went through a SEC attorney. This isn't like, hey man, just give me your money and we'll go write it down on a piece of paper and I'm gonna give it back to you eventually. It's like, no man, we had lawyers draw everything up. It's official. It gets filed with the SEC. And like I said, it's the Jobs Act really opened it up for everyday people to have the opportunity to invest in real estate, because that was not the case before.
Awesome, man.
So I showed Trump a little love. I showed Obama a little love.
Both sides, right? Everybody gets some.
Both sides of the aisle.
There you go. Hey, look, usually the answer is probably in the middle. So, hey, I stand by that. So, no, man, that's awesome.
The answer is either B or C.
No, man, I love that, man. I think you dropped a ton of gems, a ton of knowledge in here, man. I really appreciate you really kind of breaking it down. I know we didn't dive into every single avenue, but real estate is, it really is such a smorgasbord of just, different situations. So, but I'm hoping that folks that are listening to this just got a sample of that and, do your research, hey, there's Google out there, YouTube, like there's so much information out there. There's really no reason why you can't go out and learn more and take the opportunities, where necessary. And again, to Junius's point, and something I know I've been advocate for is that, look, if you enjoy what you do, continue doing that, right? Go all in on that, right? And so, but if you want to get started in something else or you want to try something else, you can do that too. But it doesn't mean you have to be all in on it either, right? I like the aspect of real estate. I enjoy it, but I don't want to do that full time. I don't want that to be my day job by any means. That's not my thing at all, right? So But you can take opportunities to invest in, organizations and firms like Junius's and get there too. So and build some of that generational wealth, which we've talked about, which is a part of the American dream. So
absolutely.
But no, man. So as we bring this to a close, man, I want to at least give you the opportunity to kind of maybe share some of your contact information or Stratford's, websites or links or anything else like that folks may, if they're interested in maybe investing with you in the future or just getting a hold of you or learning more about you and your organization. I want to make sure you get that opportunity to kind of share some of that as well.
Yeah. I think I'm on Instagram more than anything else, and it's Junious Williams. No place to hide. So Junious Williams. And then I also have the Stratford Capital, I think it's Stratford Capital Partners Instagram page. I believe, you have to have a Facebook page as well if you're on Instagram. So I'm also on Facebook. Obviously, my name, Junious Williams, and then Stratford Capital Partners has a Facebook page. And my email is really easy. It's jwilliams@stratfordcapital.com.
Yeah. And I'll include all of this in the show notes as well. And I'm pretty sure y'all have a website. So I know
StratfordCapital.com.
Yeah. So I'll include all that too, man. So, man, again, really appreciate you, man. I love this conversation. Might have to bring you back, man. You did a good job today. So
appreciate it. I know if I don't get brought back, it's like, I didn't do well.
No, man. All right. Appreciate you guys tuning in, man. Keep building. Peace.
All righty. Thank y'all.
Hey, thanks for tuning in. For more content, please click the subscribe button and follow us on all social media platforms at How to Corporate. Until next time, keep building.